Okay, Mega team, thanks for tuning back into the video today. I hope everyone's having a great day. We're going to go ahead and take a look at Bitcoin again today and talk about what is actually going on with the charts, where we think the price will be heading, and what we think our targets will be for the downside and of course the upside, provided Bitcoin holds $18,000 or loses $18,000. So let's talk about $18,000 first, all the new viewers to this channel, and really discuss why $18,000 is important. Before that, I do want to go ahead and let you guys know that we do have our free channel over here. I suggest everyone go ahead and join up. It's our Telegram channel, links down below. Post daily updates, market analysis, trend analysis. All our videos are posted in here. A whole variety of different other things, such as polls. You can vote on what video you might like to see next. All these other cool things. Go ahead and join down below. That being said, we're going to go ahead and dive in, and you can see, just like every other time, the Bitcoin price, like we said, all the way back in November, has retested this solid trend line, guys. It has happened. The Bitcoin price has come down and retested this solid trend line. We have a few phases, all right? We're going to go ahead and talk about this for all the new viewers. We have obviously our bottom phase, which is this black box over here. We have this gray box over here, which is our blow off top, and this yellow circle over here, which is our bear market resistance, or where the bear market officially begins. We can see it happened over here again. So we had bear market begins here, here, and here, and we had our blow off tops in this section over here. And of course, Bitcoin retesting the solid black line at the bottom is that bottom signal according to this 9-year long market structure. And obviously this is a 9-year long support line, guys, so we should definitely not be looking at a support line, and we shouldn't be underestimating how important or how critical this level is. And we're going to talk about this later in the video in regards to what happens if we do lose it, and of course what happens, from here, provided we do bounce from it. So before we go ahead and get into any of that, I do want to go and point out that if we do lose this 9-year trend line, all of this stuff over here becomes an old trend. We can no longer really use this on the macro scale to predict what's going to happen next. It can provide horizontal data, but no longer diagonal data. So it eliminates a lot of the data we've collected on the Bitcoin chart over 9 years. And particularly that 4-year cycle gets a little bit messy at that point. Not that I'm a huge fan in using that anyway, but I know a lot of people are. So what happens if we lose $18,000? That's what we're going to start with talking about first. And as you can see, Bitcoin has dropped back to $18,000 into this range. This range sits between $19,250 to $17,588, if I'm not mistaken. And it expands back to this major resistance zone over here, as well as our all-time high in 2017. Now, this is a very sticky point for Bitcoin. If Bitcoin loses the lower end of this support, which is 17,588, represented by this solid line, this red line on this chart over here, we can expect the Bitcoin price to continue its propelled drop downwards, all right? If it loses that level, this level 17,588, let's go ahead and adjust this real quickly. We can expect Bitcoin to continue downwards. Where are the next support lines? Mid 1600. We expect mid 1600 to act as a major support, and then we expect subsequently 15,000, 12,000, 10,000. I do not think 10,000 will ever get reached. I don't think it's going to happen. I think, however, $12,000 could be touched if we do lose this level, all right? And by losing this level, I mean we daily to 3-day close underneath it, and we retest it as a resistance and then push downwards. That will be constituting losing the level on that retest, all right? I think that will be the absolute bottom for Bitcoin. I don't think we'll be heading any lower. The problem with this prediction is, if this actually occurs, if this actually plays out, it invalidates, well, it doesn't invalidate, but it no longer allows this chart to be valid in the sense that it has been in the last 9 years. This trend line is now acting as a major resistance on the chart. There's a whole other things that happen over here that we can no longer use in our advantage. If we take a look at this chart, we've utilized this chart the entire way to predict basically every single move completely accurately without even degree of deviation. It's been completely accurate the entire way. But if we do lose this level, we no longer have that. So that's a pretty big threat for Bitcoin. Take a look at Bitcoin dominance. It is falling through over here, which means altcoins in comparison, Bitcoin won't be bleeding as much. Of course, altcoins being a smaller market cap, the percentage swings are greater, so they are going to be bleeding a lot. But as long as that drops, altcoins will take the back burner on the bleed, like we talked about in yesterday's video. And that will continue downwards. Altcoins will drop in comparison with Bitcoin around equal percentages rather than more. I'm going to go ahead and remove this alert before it starts going off. And we can see Bitcoin is already dropping. So let's talk about this range over here one more time. we already defined the distances between, or the price gap between this range. If we go ahead and look at this chart, we can see Bitcoin touched that bottom end of that range, pushed up, got rejected from that top end, and is now pushing back down, losing this diagonal support. What does that mean? Well, it means it's getting rejected and it's going to head downwards, so we can't expect that level to break. It is more likely that the level breaks than it is that it holds. So what happens next for crypto? What happens next to your holdings? What should you be doing right now? So I personally suggested buying at 18,000, or at least on this trend line, which is 17,558 or whatever it is, 17,588. That is because a 9-year trend line should act as support. If it doesn't, we cut our losses very, very small percent, you know, like 1% loss. The invalidation is incredibly tight. It is worth taking a risk. So let's take a look at Bitcoin dominance, because I think this is really telling in the sense, it really is telling us what's happening on the economy, and the economy is driving this move. And we talked about this, so I'm not too sure what I was explaining up there, but we're going to go back to this chart over here. And of course, we've been talking about the DXY on this channel since we started the channel back in December or November last year, whatever it was, telling you guys it's going to break up. And we can see we are clearing this resistance zone between 103 and 104. We've cleared it very well over here, and we've got this freedom to move up quite aggressively, even to 110 over here. And of course, as interest rates continue to rise due to inflation, remember inflation is very, very high right now. Inflation is continually rising because the interest rates aren't pumping enough. They're not up enough to start flipping inflation to the downside. Inflation is still increasing. With economic expenditure up, with budgeting up, inflation is still pretty rampant right now, which means interest rates have to rise continuously. And I know in Australia, where I'm from, they said they're going to increase interest rates for 2024. More likely it's going to happen than not. Potentially more, potentially less. Who knows what the government's going to do? They always tell you one thing and do another thing, but the interest rates will need to rise. So as interest rates rise, interest on debt increases. People are repaying more debt. Of course, what does this result in? Lower household available cash flow. If you have less cash flow, you're less likely to invest. You're more likely to remove money or cash from investments to fund your debt, or to pay off your debt, or to fund the cost of living as the increased cost of goods and services rise in our economy. So very simple. When it comes to retail investors, it's very simple. When it comes to companies, a little different. This is where it gets interesting. I think this is very relevant in now with all this stuff going on with the big funds going under in cryptocurrency. We warned you guys like 7 months ago this was going to happen. We warned you over 7 months ago that this was going to happen. It was a matter of time, because companies have been acquiring Bitcoin, have been acquiring stocks, have been acquiring risk assets on a very, very low credit, while the interest rates have been incredibly low. They've been acquiring, I mean, they've been stacking essentially on debt. What happens now? Their debt repayments are higher. So they need to increase their cash flows or move more cash to repay that debt. What does that do? It decreases their debt to service ratios. If the debt to service ratios decrease, their stock prices devalue, all right? Their future earning potential decreases. People sell off the stocks, companies start becoming weaker and weaker, all right? If they're losing their assets or selling off their assets, which are income producing assets, they have less income, they have less cash to use, to expend. If costs of goods are increasing, people are spending less money, they make less revenue. It's like a double-edged sword. They're screwed either way. So now they're losing money because people are buying less because the cost of goods are rising. All right, they're making less money, and they're having to sell off income producing assets. All right, not only with that, is their interest on their debt repayments to acquire those assets in the first place are increasing, which means they have to pay more money back. And that is what we're seeing. We're seeing the snowball effect of these companies falling. And this extrapolates further from just companies. You can apply this to individuals who have mortgages. A lot of people tell me I'm wrong. A lot of people tell me I was talking crap, all right? The reality is, months ago when I told you the housing market was going to drop, it is now starting to drop. It is exactly the same thing. The housing market is ridiculously oversold. People have taken massive loans. When interest rates rise, they can no longer afford the repayments on the loans. What happens? They have to close or foreclose or sell the asset. If a surplus of people are selling these assets, what happens to the price, guys? Demand, supply. It drives the price downwards. That is what is going on with the housing market. That is going on with cryptocurrency. That is going on with stocks. That is going on with every single market globally right now. And until this here, until this relationship between interest rates and inflation flips, until we get a flip of this relationship, all right, everything else, all right, because all of this stuff here is impacted by that, and all this stuff here results in economic growth, or we're talking about performance of risk assets. So we're just going to write P. All right. Until this changes, all of this won't change. Therefore, the performance of its assets won't change. It is very, very simple, guys. You really don't need to overcomplicate it any more than that. I hope this makes sense. But in essence today, guys, all I wanted to come in here and say is Bitcoin has reached our 9-year support line. What happens next? If we see a significant bounce on here, we see a bounce that propels us into a nice rally, and every single time we touch this level, we saw significant bounces. You know, every single time we touch this level, we see some pretty significant bounces that takes us back over the 200-day moving average. So the 200-day moving average right now is sitting at around 20% above where we are currently in price, even potentially even a little bit higher, 22%. So either we see a significant bounce from here, or we continue the crash downwards. All right, right now, I think the best thing to do right now is to create a small position, not a very over leveraged position, not a very, very big position, a very small position. Try and scoop some floor over here. And if the price loses that 17,588 level, you just sell at a very small loss, 2 or 3% loss. And guess what? You only risk like less than 10% of your portfolio. So you're losing realistically 0.3% of your portfolio to potentially catch a bottom. That is what I would be doing. That is what I think the best decision is to do. But of course, trade your own risk, make your own decisions, view the chart yourself before you make any decisions. With that being said, guys, I want to quickly introduce Bitget Exchange. And I also want to say, if you're interested in joining our VIP channel, you can go ahead and contact me in the comment section down below. We post a variety of updates and trades. We've done close to about 1,500% profit this month, and a lot more. If you're interested in that, contact me down below. With that being said, I'll catch you in the next video. Okay, guys, so we're going to take a look at Bitget next, and I highly recommend sign to Bitget. This is where I personally trade. So if you want to be trading where I trade on a daily basis, sign to Bitget. In the comment down below, you'll see the referral link. Just go ahead and click that. You can sign up, and you get access to our reward center if you sign up. And there's a whole range of different things you can do here to basically get rewards. And you know, the rewards bonus is up to $4,163 US, which is pretty significant. But you can go ahead and get access to that if you click the link down below. Beyond that, guys, I really do like Bitget Exchange. I'm not just saying that to shill you guys a referral link. Honestly, sign up without the referral link. I don't care. I'm honestly telling you guys, 0.02% trading fees is just too good to miss. You just really can't miss it. It's 0.02%, guys. It's insane. But this is the futures over here, and it's a global exchange that doesn't have KYC, so anyone can access this from anywhere in the world and get access to all the tools. So whether you're in Australia and you generally can't access futures, you can sign up here and get access to futures. If you're in, let's say for example, I think the UK and you can't get access to futures, you can sign up here and get access to futures. If you're in America and you can't get access to Binance or Binance Global and you can't access a lot of their spot trading pairs, they have all the spot trading pairs that Binance has over here plus more. They have over 250 spot trading pairs and all the big ones on this exchange that you can trade, and the liquidity is quite high. So I highly recommend signing up here, and of course, like I just mentioned, you get access to that reward center, there's copy trading, there's a whole range of other things, and go ahead and sign up, guys, because it really is probably the best exchange out there. All right, let's go ahead and get back into the video.